The following is a presentation of TFNN.
Let's go to our first call of the day. We'll talk to John in Austin, Texas. How you doing today, John?
Way too good, Ken. How about you?
Oh, not too bad.
I know I'm like a lot of listeners. We thank you so much for helping us to earn money in the market, and Mr. O'Brien also, and what you all do at TFNN. It is absolutely huge. We appreciate it very much.
Well, I appreciate that comment very much, and I'm sure Tom does too. Thanks very much.
All the best to you and your family, man. I'm telling you, we so appreciate what you're doing. You do such a great job. This show is fantastic every day.
You're a good man, John. Really appreciate it. It makes my day. Thank you.
Okay, buddy. Take care.
Live at TFNN, Breakout Investing, with your host, Ken Shreve.
Good afternoon, everyone. Happy Thursday. Welcome to another edition of Breakout Investing on TFNN, 5 days a week on the network from 3 to 4 Eastern. If you can't listen live, don't worry about it. You can always head over to iTunes and pick up the podcast. Feel free to leave a review there. Appreciate the reviews so far. And if you want to listen to TFNN on your smartphone, you're out and around, maybe out for a walk, out for a run, very easy to listen on your smartphone. Just open your smartphone browser, type in tfnn.mobi, your smartphone browser, and you can listen to the stream that way as well. And don't forget to check out Tiger TV right on the homepage of TFNN.com. Channel 1, the show is carried live. It is archived in Channel 13, and not only do you get the audio on Tiger TV, but you can also look at charts live right along with me. And I have a chart right now up for the NASDAQ Composite. We had the release of the Fed minutes today. We had the European Central Bank meeting earlier today. They left interest rates unchanged in the area at 0.75%, but the NASDAQ working on 3 straight gains here, trading up near its session high. Let me just go ahead and update this chart. And we will see the tech index up 14 points, about 0.4% to 3148, still holding nicely above its 50-day moving average here. Nothing wrong with the NASDAQ from a technical perspective. Really not seeing a whole lot wrong with this market from a technical perspective, not only in the indices, but also in the leading stocks as well. The S&P 500 up near its session high as well, 10.5 points or so, 0.7% to 1461. And what the heck, we'll check on the Dow. Of course, yesterday, remember, Hewlett-Packard weighed on the Dow after Meg Whitman said that 2013 was going to be a kind of a fix and rebuild year for the company. Translation, dead money. But Hewlett-Packard weighed on the Dow a little bit. I mean, the Dow was still higher yesterday, and it is extending gains today, also up near its session high, 86 points, 0.6% to 13,580. Okay. All right, so that's what we have with the major averages here. Volume today tracking 5 to 10% lower than what we saw yesterday on the NASDAQ. NYSE volume about 5 to 10% higher. So another decent day for the market here. As expected, like I said, the European Central Bank left its key lending rate unchanged earlier today at 0.75%. We also had the minutes from the September 12th, 13th Fed meeting come out. Of course, in the last meeting, the Fed started their open-ended buying of $40 billion per month of mortgage bonds to keep interest rates low. That is certainly working. In the Fed minutes, the Fed's concerns, nothing really new in the minutes. Fed's concerned not only about slowing growth in, China, the debt crisis in Europe, a sluggish job market on the home front, manufacturing data sluggish here as well. Fiscal cliff right around the corner. Is that going to impede economic growth? So there's a lot of things on the Fed's mind right now, but all that played a role into the recent new round of quantitative easing by the Fed. The minutes also showed that some participants were less confident that the new bond buys would work as well as past programs. So we will see. Crude oil today finished at $91.71 a barrel, up 4.1%. Main headline for oil today: hostilities on the rise between Syria and Turkey. That, of course, is raising supply disruption concerns in the Middle East. So big day for crude oil. Gold up big as well, $16.70 higher to finish at $17.9650 an ounce. Once the Fed minutes came out, gold did back off, was recently trading around $17.92 an ounce. Haven't looked at the GDX in a little while, the Market Vectors Gold Miners Fund. It is in a good technical setup here today, up $1.43, 2.71% to 54.15, sitting just underneath a swing point of 55.25. So seeing plenty of charts out there, whether it's the GLD, the GDX in the gold space, a lot of growth stocks out there in good technical setups, just kind of simmering on the stove here, perhaps poised to break out. Have several holdings in my Ultimate Growth Stocks model portfolio that broke out a month or two ago, continue to trade very well, and I've got some in there that are, moving right now. I just added to a position yesterday because it broke out over another swing point today in very strong volume. So seeing still encouraging action here in the market. So that is all good. U.S. dollar took a hit today. It is right around 79.36, the U.S. dollar index at 79.36, down about 60 ticks, about 0.75%. I want to show you a weekly chart of the U.S. dollar index here, and we will see that it is getting down close to some support levels here. 78.60. which I have, again, you can look at Tiger TV with me, 78.60. That was set earlier this year, and then even before that, February, March, it hit a low of 78.10. So, right now, 79.36. It is, less than $1 from coming pretty close to that 78.60 low that was set back in April, May, thereabouts. So. U.S. dollar taking a hit today. That has been good news for the stock market. Taking a look at a couple of charts in the Dow. More good setups, especially in the financial space. I mean, look at Citigroup here. It's adding a handle area in a bullish cup with handle pattern. Citigroup has a swing point of just over 35, it looks like. So Citigroup acting well, and 35.50 I think is the swing point for Citigroup. And then J.P. Morgan, we mentioned J.P. Morgan going to be coming out with earnings a week from tomorrow, along with Wells Fargo. J.P. Morgan looking real strong here, up 2.4% to 41.84. just underneath a swing point of 42.09. So what we have here are these financials, not only Citigroup and J.P. Morgan, those are the two better looking charts out there. Both of these stocks look poised for higher prices. And again, if you don't want to play the individual names in the financial sector, just check out the XLF. It is right now trading around 16.07, up 1.5% on the day. It is sitting just underneath a breakout area of 16.44. That would be its high set back here in September. So XLF not looking too bad either. All right, folks, don't forget to check out the Great Panther Silver Halloween giveaway between October 29th and October 31st. We're going to be giving away 27 pieces of silver for Halloween on October 29th and 30th. TFNN is going to give away a half-ounce piece of silver every hour from 9 a.m. to 6 p.m. Eastern. And on Halloween Day itself, October 31st, going to give away a full 1-ounce silver piece every hour from 9 a.m. to 6 p.m. Eastern Time. You can get more details right on the homepage of TFNN.com. The American Association of Individual Investors came out with their investor sentiment survey today. Bulls at 33.9%, down 2.2 points from last week. Bullish sentiment is at a 4-week low, and it came in below average for the 26th sixth week out of the past 27. Bears 33.2%, down 3.2% from 3.2 points, I should say, from last week. Bearish sentiment is above average for the sixth consecutive week and the 22nd time in 26 weeks. So from what I can tell, this AAII Investor Sentiment Survey, when you have increasing bearish sentiment, a lot of these sentiment surveys can be contrarian. So if you've got a lot of either very low bullishness or very high bearishness, it actually can be a good thing for the market. Let's check out shares of Facebook today. There was news that, well, their monthly active users are now at 1 billion, maybe just a little bit over 1 billion. 600 million Facebook users are mobile users. You know, it takes a lot more than big numbers to really help a stock price. And you can see Facebook not really moving on this news. I think the market probably knew it was only a matter of time before Facebook hit the 1 billion active user mark, but right now the stock is down 2 cents to 21.81 after hitting an intraday high of 22.40. You know, you have to remember, Research in Motion has got some 80 million subscribers, and what has that done to help the stock? Not very much. So again, it usually takes whether you have 80 million subscribers at RIM or 1 billion active users for Facebook. Investors are, you know, it's show me the money, and that is the concern with Facebook right now. Let's see if the company can start delivering solid growth on the bottom line and top line. It's probably going to take a couple of quarters for them to do that, but shares of Facebook have moved up off their low and still holding above its 50-day moving average here, but still not clear to me that institutions are excited about owning this stock. All right, so that is it on Facebook. Earnings news, pretty quiet today. We did see numbers from ISCA, not very good numbers, as a matter of fact. International Speedway, this is a big NASCAR play. They operate a lot of racetracks around the country. I mean, look at the destruction in this stock today, down 11.3%. Today alone, down 11.3% to 25.23. You know, you could see there were some big red volume bars here back in September, so it looked like there were some big sellers in the stock, and the bottom really fell out today. The numbers were not good at all. They missed earnings by a wide margin. Earnings fell 95% from a year ago to a penny a share. Sales down 23% to 115.9 million. Wanted to check in on shares of Sarepta, SRPT. Remember, the stock had a big day yesterday and actually holding gains pretty well here. Down $5.34, but when you look at the scope of its gain yesterday, it's actually holding its gains pretty nicely, recently trading around $39.59. So this will be an interesting one to watch. If it could just kind of move sideways here, trade tightly, you could actually see another entry point in 2 to 3 weeks. So we'll follow this one for a little while longer. We'll be right back, folks. Breakout Investing on TFNN.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
80% of traders fail because they don't know when to get in or out of a market, and all because no one taught them how to read the signs. You see, the stock market has a universal language called Japanese candlesticks, and each day, the buyers and sellers, the bulls and bears, go to work and build signs. This language has been around for thousands of years, and it's easy to learn. I'm Steve Rhodes, co-host of the Money Masters Show, and I'm a master sign builder. Download my free report, Candlesticks, The Speed of Trust, on the homepage of TFNN.com for one of the best-kept candlestick secrets. I'll also be conducting an online course Friday, October 19th, to teach you the language of the market's sign builders. You'll learn the best entry and exit techniques and strategies that will create extraordinary rewards. The course will be archived so you can review it as many times as you like, because trading or investing without learning this language is like running a red light. It's an accident waiting to happen, and there's no airbags or seatbelts. All the details are on the homepage of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, everyone, to Breakout Investing on TFNN. Before we went into break, talking about Sarepta Therapeutics giving back some of its huge gains yesterday. The stock was up, more than 150% yesterday. It is down 12% today to $39.59. But when you look at the daily chart, it really is holding on to the better part of its gains. And again, this is a stock where, if it kind of holds these gains and moves sideways for 2 or 3 weeks, get some good tight trading that indicates strength and support for the stock, you could get an alternate entry point here. But I wouldn't chase it up here. The news on Sarepta yesterday was one of its experimental drugs improved the walking ability in patients with a rare muscle disorder called Duchenne muscular dystrophy. It's a genetic disorder that causes progressive muscle loss in boys. So a lot of optimism that this drug could be a blockbuster. Economic data. Earlier today, we had new data from outplacement firm Challenger, Gray, and Christmas ahead of Friday's jobs report tomorrow. Showed that U.S.-based employers announced plans to cut 33,816 jobs in September, up close to 5% from August, but down 71% from a year ago. So it was actually pretty not terrible news there. Of course, the jobs report does come tomorrow. Economists are looking for the economy to add 120,000 jobs after 96,000 Jobs were added in August. The unemployment rate expected to stay right where it is at 8.1%. Also today, weekly jobless claims up 4,000 to 367,000. The prior week's data was revised to 363,000 from an initially reported 359,000. So no big surprise in weekly jobless claims earlier today. Also, factory orders for August down 5.2%, mostly in line with expectations. All right, let's take a look at some movers today. Always movers to talk about stocks acting well. Chico's FA, CHS, nice retailer here. You know, if you miss a stock and you miss an initial breakout, and Chico's FAS, you can see it had a big base here that started back in May, and then it broke out in August, ran up nicely, and now it's coming down to its 50-day moving average, and there's a little bit of juice in the stock today. If we swing over and look at a weekly chart for Chico's, you see a pretty nice technical setup here. So after a breakout, stock comes down to its 10-week moving average and finds support. That is, absolutely a secondary buying area. Some people that bought at the base breakout here, they're sitting on their position. They may want to add a little bit more. So, for example, if you bought 500 shares at the breakout, maybe you want to add 250 here. That's going to keep your average cost basis in check. You don't want to get too top heavy in a position. Or if you didn't buy at the breakout and you're buying for the first time, well, maybe you wouldn't buy as much as you normally would for an initial position. That's generally how I go about doing it with the Ultimate Growth Stocks model portfolio. I don't own Chico's right now, but it is a stock I'm looking at, and frankly, it is within buying range. Ideally, I like to buy stocks when they are moving out of consolidation areas in heavy volume during market uptrends. We are in a market uptrend right now, so that is a pretty good environment to be making money in stocks. But Chico's is a good example of support at the 10-week moving average, and the stock is outperforming nicely today. So Chico's looking pretty good here. Still waiting on Akamai Technologies. There's a saying that stocks can either scare you out or they can wear you out. Really, there haven't been too many instances in recent months where we've been scared out of a stock due to perhaps multiple higher volume declines or repeated signs of institutional selling. But there are some stocks that are starting to wear investors out because, kind of waiting for them to move. They have good technical setups. They should be moving, but they're not. So Akamai is kind of meandering around here. It's a great company, accelerating sales growth in recent quarters. The stock right now is up 34 cents, almost 0.9% to 39.38. It is sitting just it's actually a little bit over. Let me get the swing point here for Akamai. I thought I had it written down here. It won't take me long at all. 39.67. 39.67. That would be its high set right here. So it's got another 30 cents or so to go to get to that swing point. But volume is just hasn't come into the stock yet. So really, a stock like Akamai that normally trades about 2.8 million shares a day, on a breakout day, you'd want to see 4 million plus. And it's just nowhere near that right now. So no volume yet in Akamai. Good technical setup here. Breakout isn't out of the question. Just need a lot more volume. Need to see signs of institutional buying here. But another decent setup out there worth paying attention to. Stick with me, folks. We'll be right back.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss miss out on this great offer. Act now. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. TFNN and Great Panther Silver have teamed up for another exciting silver giveaway. The Great Panther Silver Halloween giveaway will be taking place at the end of October, and for 3 full days, we'll be giving away silver coins and bars every hour from 9 a.m. till 6 p.m. to one lucky winner randomly chosen. There's no purchase necessary. For more information and to fill out your registration form today, simply visit the front page of TFNN.com where you'll find all the details. October 29th, 30th, and 31st, we'll choose one lucky winner that will receive a silver coin or bar courtesy of Great Panther Silver. Winners will be announced live on the air each hour for 3 full days. Don't miss out on this great opportunity to win free silver from TFNN and Great Panther Silver. Register today by visiting the front page of TFNN.com. And for more information on Great Panther Silver, you can click on their banner on the front page of TFNN.com or check them out on the NYSE Amex, symbol GPL, or on the Toronto Stock Exchange, symbol GPR.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Welcome back to Breakout Investing, everyone. Wanted to take a look at a recent new issue. Guidewire Software came public earlier this year in January at $13 a share, and it's trading very well, very nicely above its offering price. Looking at a swing point here of $33.15. Anytime you hear me mention the term base or consolidation or a stock that's about to come out of a consolidation area, this is a classic example of what a base building stock looks like. You had the base that started over here in March, came down, fairly shallow correction, started to work its way higher, and now it is flirting with a breakout over a swing point of 33.15. So it's usually pretty risky buying a stock in anticipation of a breakout. I'm not saying I never do it, but typically it's best just to wait for a big rush of trading volume to come into a stock, and it's just a kind of safer, if you will, better opportunity to make money. But Guidewire is a software company. They mostly serve, they do billing software for the insurance industry. Nice technical setup here. Decent top-line growth. The sales growth in recent quarters has been pretty solid. Earnings growth has declined on a year-over-year basis for the past 2 quarters. So a little bit of a mixed picture fundamentally. It is a high multiple stock as well, so I think there's a lot of optimism about growth prospects here. But I have to say the technical picture is very, very strong here. And again, swing point of 33.15, a breakout over that price level certainly would be compelling. So good one for the watch list. Talked about other technically healthy stocks before we went into the break. Retailer, specialty retailer, women's retailer, Chico's Foss, CHS, and also Akamai, AKAM. Let's also take a look at Expedia. Kind of have mixed feelings on Expedia here. EXPE on the NASDAQ, but again, just another example of a technically sound stock here, holding above its 50-day moving average. It's up 16 cents right now, off its session high to 58.51. You have a swing point of 60.29. That would be the high point set about 2 weeks ago. So again, just one to keep an eye on. If new money comes into this market, new institutional money might come into these some of these growth names that are setting up bullishly. I would say that Expedia is in another bullish technical setup as well. There are a lot of them, and again, that's one reason why I'm really looking at this market more from a glass half full perspective rather than a glass half empty perspective. Right now, let's check in on the markets. We've got a little more than 20 minutes left to go in Thursday's session. The Dow right now up 79 points. 0.6% to 13,574. NASDAQ, similar percentage gain, up a little more than 16 points, 0.5% to 3151. And the S&P 500 outperforming a little bit here, up close to 11 points, 0.7% to 1461. Had a lot of same-store sales results from many of the nation's retailers. Let's take a look at some highlights here. Shares of Target. See, Target has been under some selling pressure. This has been a big leader in the large cap retail space. You can see last week it came down to its 50-day moving average. Didn't fall precipitously below the line. It's actually reclaimed the line today. It is up 1.1% to 63.77. Same store sales up 2.1% in September for Target. So market seems to be pleased about that. Limited LTD. This is Victoria's Secret, Bath and Body Works. Limited off its session high, but working on 2 straight gains. It's only up 5 cents now to 50.29 after hitting an intraday high of 51.04. Same store sales at Limited up 5%, a little better than expected. Economists were looking for a 4.3% gain. Checking in on the shares of the Gap GPS. Great turnaround going on here. See, Gap started to rally nicely along with the broad market in July. Then it started moving sideways, holding on to its gains, holding above its 50-day moving average. Another technically strong stock here, working on its 6th straight up day in a row. It is up another 33 cents today to 37.08. Same store sales at Gap up 6%. Broken down by store, Gap North America up 5%. It's Banana Republic chain North America up 4%, and Old Navy North America continues to do very well. Same-store sales were up 10% there. International same-store sales down 3%, but that was a lot better than a decline of 13% in the year-ago quarter. Department stores, not all that great. Let's check in on shares of Macy's here. I think some were up and some were down, but Macy's, working on 5 straight gains here, but has reversed off its high. It hit an intraday high of 40.53. It's only up 15 cents right now to 39.64. Same-store sales up 2.5% at Macy's. We also have Nordstrom here, JWN. Nordstrom, reversal here as well. It's given back all its gains. Look at this stock. Hits an intraday high of 57.47, currently trading at 56.04, only up 16 cents on the day. And finally, Kohl's was a disappointment. KSS. Kohl's under a lot of pressure today, down 2.5% to 50.91. Same-store sales came in worse than expected, down 2.7%. 1%. And then the discount retailers, the two leaders in this group, TJX companies and Ross stores. All of these retailers pretty much doing the same thing here. They're well off their highs, kind of giving back all of their earlier gains. TJX and Ross actually raised their third quarter earnings guidance, but I have to say I think just a lot of good news has been priced into these stocks. If you look at weekly charts for both, I mean they've been on such an incredible price run, and all good runs eventually come to an end. So I'm not saying it's over. Stick a fork in them, they're done. But I just think the risk outweighs the reward at current price levels. So TJX under pressure today, and let's check in on Ross stores as well. Another discount retailer, and this one looks worse than TJX actually. Ross stores recently broke below its 50-day moving average. Looks like that could be a significant resistance level at this point. Shares of Ross getting hit hard today in heavy volume, down 1.8% to 65.46. You can see how the 50-day moving average was resistance in September. Stock fell pretty sharply after that, tried to rally back to its 50-day, and is getting turned away again. So Ross, ROST, looking technically weak here. Another name I've been writing about lately, Kihu 360. Yet another interesting technical setup. This one, could not out of the question that it could be an emerging leader. Kihu is a provider of internet and mobile security products in China. Mentioned yesterday or just recently that the company also launched its own search engine. Got rid of Google, launched their own search engine. That's caused some selling pressure in Baidu, but Kihu up 2 cents today to 23.48. Looking at a swing point in Kihu just over $25 a share. So, if institutions start buying the stock, you really have to think that it is setting up for a potential breakout just over 25. So fundamentals very solid here. You do have a strong balance sheet, a company that is expected to grow earnings and sales nicely, not only this year but next year as well. LinkedIn, another one. LinkedIn is, kind of stubborn here. This is a current holding in the Ultimate Growth Stocks model portfolio and working on 3 straight days of gains here. What's interesting is that if you don't own LinkedIn yet, the stock technically has still not broken out from an IPO base. So, when you're in a market uptrend, it's always a good idea to pay attention to, newer companies, new issues, especially those that are setting up in bullish base structures, stocks that still could conceivably be in the early stages of a move. Now, LinkedIn recently broke out over $113 a share. It's at 122.04 right now, up 36 cents on the day, but there's a new swing point here of 125.50. Okay, that's going to be the high point in the handle area right here. Now, the weekly chart, as always, is going to give us a little different perspective, but remember we just looked at GuideWire's IPO base. This is another nice little IPO base setting up here for LinkedIn. Handle area forming for, 3 to 4 weeks now. There's your swing point of 125.50. I think that this is a stock that probably growth fund managers out there want to own, and I am confident that this thing is eventually going to be able to break out. I'm long, own it for the Ultimate Growth Stocks model portfolio. Got a nice cushion in it, so we'll see. But technically, it looks strong. So we'll see what happens. We'll see what MasterCard is doing after its heavy volume breakout yesterday. Impressive performance by MasterCard, and following through, but not by much. The volume yesterday in MasterCard was very impressive. It's up another 93 cents today to 471.69. The swing point was 461.79. 461.79. So, it's only about $12 above that swing point. This is a high price stock, so it doesn't look to me that it is overly extended at this point. But it really, again, I keep going back to this point, but it is where it bears repeating that most of the strong technical breakouts, they've been happening for a while now. A lot of them happened in July, many more happened in August, and actually in early first half of September, there were even more breakouts. So now you've got stocks kind of bringing up the rear here. MasterCard's performance yesterday was very bullish. It still could work, and you wouldn't have been wrong by buying yesterday's breakout. But again, I've got 12 stocks in the Ultimate Growth Stocks model portfolio, which is on the high side. And I added to a position today, but I don't want to, I can't buy every single breakout that's out there. But MasterCard is looking pretty good. Folks, if you do want to check out 30 days free of Ultimate Growth Stocks, you can do that right on the homepage of TFNN.com. You just go to the Newsletters tab, then click on Investment Newsletters, and you can get all the information you need right there. All right, taking a look at some other movers here. Looked like it was going to be a rough day for shares of CRM, but last check, the stock had been actually has recovered nicely off its lows. It hit an intraday low of 154.87, now trading at 157.92, up 88 cents. So this is yet another stock that's getting into position for a possible breakout try over 161.90. Again, successful breakout is going to be fueled by institutional buying. It's going to be fueled by heavy volume. I'm not a big fan of buying low volume breakouts. Volume in the market remains relatively light, but if we do see money continue to come out of bonds and you start to see new money coming in from the sidelines, wouldn't be surprised to see volume at least pick up in spots. And so CRM is another one that you want to keep an eye on. Same with Tractor Supply. TSCO, this is a farm and equipment retailer, another cup with handle base setting up here. This is, I would say that the price action in this handle area here has been a little bit erratic for my tastes. Typically, the more erratic the trading in the handle, the less likely the chances for a successful breakout. But it doesn't mean that one couldn't happen. The swing point here is 101.28, and let's take a look at a weekly for Tractor Supply as well, because this is the weekly kind of smooths out the volatility. And again, this is a stock that reset its base count back last year. The low here undercut the low of the prior base, so it broke out from a first stage base in this area here. So it is working on a second stage base right now, swing point of 101.28. So you can see the weekly chart, it really doesn't look too bad. Question is, will it attract enough volume to fuel a successful breakout? Another growth name worth paying attention to here. We've been talking about it in recent days, but why not? It continues to set up bullishly here. Lululemon Athletica, the yoga retailers, adding a handle area currently to a cup with handle pattern. Big move on September 7th right here when the company reported better than expected earnings. Swing point here is 78.97. So you know what? It's like everywhere you look, there are pretty decent setups out there. I think that is worth paying attention to. How about Stephen Madden? Stephen Madden, you see all these charts. It comes down to its 50-day moving average here. It's not perfect. It can be, there's some volatility here in the shoemaker, but Stephen Madden also in a cup with handle base, swing point of 45.55, but the warning here for Stephen Madden, I think I've got a weekly chart here. Yeah, there it is. Stephen Madden, it has made a big price move, fairly deep base in its most recent consolidation period. Here's your handle area here. But to me, this looks like it could be a late-stage base. And, I talk about late-stage bases. It's when you're investing in growth stocks, always good to get a stock in the early stages of a price run rather than the later stages of a price run. That's another important point that you're going to hear me hammer home incessantly, but it is important. Shoe could be a late stage base here. Headed into the final break, folks. We'll wrap up the market when we come back. You're listening to Breakout Investing on TFNN.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern, on TFNN. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Welcome back, everyone. 5 minutes left in Thursday's session. Let's do a quick check on the market here. Dow Jones Industrial Average up 67 points to 13,561. Looking pretty good for the Dow. S&P 500 also trading near its session high, up close to 9 points to 1459. And the NASDAQ Composite up about 11 points to 3146. We haven't checked in on the VIX today. Soon we're going to see some some weakness in the VIX. Recently tried to get back above its 50-day moving average, was turned away 3 down days in a row. It looks like for the VIX, it is down 2.5% today to 1504. Good news for stock market bulls is that the VIX just can't get out of its own way here. And the longer the VIX stays weak, the more likely it is that stocks can have a little room to run here. Again, the big wild card is the jobs report tomorrow. Hopefully the market will respond positively to it. Non-farm payrolls are expected to rise 120,000, with the unemployment rate holding steady at 8.1%. I would imagine a number of around 100,000 is probably going to be okay for the market. If we get a number well below 120,000, that might be a problem. But then again, you've just got the Fed in the background here and, ready to do what they can to prop up this economy. And as long as the Fed is going to stay on their course of action, it's hard to see the U.S. dollar index, for example, strengthen meaningfully from here. So I think the pieces are in place for more strength. But again, we'll just continue to monitor daily price and volume trends in the indices. And if you do start to see higher volume declines become prominent, we could get one tomorrow, who knows. But if you start to see distribution become prominent in the major averages, that often can be a signal there could be more to come. So you definitely want to pay attention to price and volume in the major averages going forward. We've mentioned that distribution has been very well contained in the NASDAQ composite up to this point. Headed into today, only 2 higher volume declines for the NASDAQ, and a little bit more on the NYSE indexes, but not by much. I think the big thing this market has going for it is the potential for continued outperformance by financial stocks. Gold is still looking good here. Gold is technically strong, and we just went through a bunch of charts on the program today. Stocks that are kind of simmering on the stove here that could benefit from a new round of institutional buying in the market. Last one we can take a look at is Yandex here. Yandex is a Russia-based search engine. Outstanding fundamentals, good growth prospects, a stock that is under accumulation, and this is all positive, and it's in a good technical setup. So the swing point for Yandex is going to be right over this $25 level here. Yandex right now up 12 cents to 24.76. We did have some big decliners today. Not to end the show on a down note, but let's take a look at shares of Nuvasiv. Rough day for Nuvasiv, down 33% on the day to 15.11. They develop products that used to treat surgical. Let me start again. They develop products for the surgical treatment of spine disorders. This company revised its third quarter sales outlook to $147 million. That was below the consensus estimate of $153.6 million. And also an earnings warning from Informatica. This is a data integration software maker. It is down 23% today to 26. Don't want to touch stocks when they're being sold by institutions like this. I would avoid both of them for now. Coming up next, the Tom O'Brien Show. I'll see you back here tomorrow, 3 o'clock Eastern, for another edition of Breakout Investing. Have a great afternoon, everyone.